Hello and welcome back to our video today, which is one of the business accounting videos, and this one is about marginal analysis. So marginal analysis looks at the impact of one more item. The most frequent types of marginal analysis are marginal costs. So you're looking at the cost of making one more item. Marginal income, how much income you will get from one more thing, and marginal profit, how much profit you will get from one more thing. So for an example, in a car factory, what is the cost of producing one more car? What is the income from selling one more car? So how does this type of analysis help? If we look at the extra income from one more sale and the extra cost of making that sale, we can calculate the extra profit from selling one more thing. This is important because it answers the question, is it worth making one more thing? If the answer is yes, you should make one more. If the answer is no, you should not. So the number at which the answer changes from yes to no is the most profitable number to produce. So we're going to compare the average cost of production versus the marginal cost. And it's important because the answers will probably be different to the average income, the average cost, and the average profit for sales of that item. The average cost is the cost of all the items made divided by the total number made. The marginal cost is the cost of production of producing only the last one. We need to talk about capacity. In economic language, we talk about the capacity of a machine. For example, your business buys a machine that can make 100 ice creams per day. So the capacity of the machine is 100. If it's only making 50 ice creams per day at the moment, it is only being used at 50% capacity. So what is the link between capacity and marginal cost? If we are only making 50 ice creams with a machine that has a capacity of 100 ice creams, what is the cost of making the first 50 ice creams? So it's firstly the things I need to make the ice cream, things like milk and yogurt, and we're saying that will cost 2 baht. And then I have to make a contribution towards the cost of the ice cream machine. So we're saying that is 1 baht. So the total cost of one ice cream made by the machine is 3 baht. So the total cost of making number 51 is firstly the things I need to make the ice cream, the milk and so on, 2 baht, same as before. Secondly, towards the cost of the ice cream machine, 1 baht. No, I don't need to charge 1 baht for the cost of the ice cream machine. Why not? Because the full cost of the machine is already covered by charging 1 baht for the first 50. After number 50, I don't need to charge any more. I will have enough from the first 50 to pay for the machine. So the total cost of number 51 is not 3 baht, it's 2 baht. So the profit from number 51 is 3 baht, and that is higher than the profit from number 1 to 50, which is only 2 baht. Correct. So why don't we need to take money off the profit for the cost of the machine from number 51? Because the machine is already fully paid for by the 1 baht profit from selling 50 ice creams per day. Wow, so that means we can keep making heaps of profit for everyone we sell after we sell the first 50. Yes, that's right, until we reach number 100. So conclusions. The ideas about marginal cost, marginal income, marginal profit help businesses to decide how many items they should make if they can sell them all. As you increase the number of ice creams from 50 to 100, the average cost will come down step by step because every time you add one more, the cost is below the average. When you get to number 101, the cost is more than the average because you need to buy a new machine. So if you make number 101, the average cost will go up. And that means the average profit will come down. So generally, you won't want to do that. So what it looks like in numbers. So firstly, you sell 50 ice creams. The cost is 3 baht each. So the total cost, 50 times 3 equals 150 baht. The average cost is the total cost divided by the total number. So 150 divided by 50 equals 3 baht each is the average cost. You sell 10 more at the marginal cost of 2 baht because the machine is already paid for. So 10 times 2 equals 20 baht. Now the total cost of all 60 is 150 for the first 50 and then 20 for the next 10. So it equals 170 baht. And the total number made is 50 plus 10 equals 60. So the average cost is 170 divided by 60 equals 2.83 baht. And that's down from the 3 baht it was for the first 50. So far we've sold 60 ice creams. Now we're going to sell 40 more, so the total sold is 100 ice creams. The first 50 ice creams cost 50 times 3 equals 150 baht. Second 50 ice creams cost 50 times 2 equals 100 baht. So the average cost is total cost divided by total number made. After 50, this is 150 divided by 50 equals 3 baht each. After 60, it is 170 divided by 60 equals 2.83 baht each. After 100, it is 150 plus 100 equals 250 divided by 100 equals 2.5 baht each. So we can say that after we go past 50, the marginal cost is 2 baht and the average cost goes down and down the more you make. What about number 101? To make number 101, we are going to need a new machine. So let's say the machine will cost 10,000 baht. That means the extra cost to make number 101 will be 10,000 plus 2 baht for the milk and yogurt, etc. So 10,002 baht. Total cost of making 101 is 250 for the first 100 and then 10,002 for number 101. The total is 10,252 divided by 101, and the average cost is 101.5 baht. Wow, that's incredibly expensive. We can't charge that much for an ice cream. So after 50, the average cost comes down, down, down. Yes, until you get to number 101. And then it becomes super big. And this is the end, my friend. See you next time.